Hello, everyone. Welcome to the second episode of the Global Trailblazers series. Today, we have with us a very special guest, and he is none other than Mr. Mike McGlone. Mike is the senior commodity strategist with Bloomberg Intelligence, Bloomberg LP. Welcome, Mike. It is indeed an honor and privilege to have you with us today. I believe that Mike and Ken have known each other for quite some time now, and Mike has more than 30 years of experience in the capital markets industry. So today we'll go through a range of questions that is with regards of trends in capital market, the movement of Bitcoin and Ethereum, digital assets, and more. But before that, before we resume, I'd like to put in a disclaimer that whatever conversations or discussion within does not constitute an investment advice. Kindly do your own due diligence and prior to taking any positions and trade at your own risk. Yes, and over to you, Mike and Ken.
Farah, thank you very much for the disclaimer. Mike, thanks very much for joining the Global Trailblazers series podcast. You are truly a global trailblazer. Every morning, I was very serious about this. You know, when I do wake up at 5 o'clock in the morning, you and I used to text early in that morning around that time. I sit up and I read your reports daily, and they're really insightful, very much helpful to the digital asset community, the cryptocurrency community, the blockchain community. I always like to start off, Mike, in terms of your journey, because you have 30 plus years as a commodity and futures trader. And I always ask the question about reflection point. You know, how do you take those skill sets and you add it over to that blockchain, that digital assets, the digital currency, cryptocurrency community? What was that reflection point that occurred to you? And I like to take a little step back to explain mine. When I started off in blockchain about 5 years ago, 5.5 years ago, to be precise, it was an advisor. I was advising a firm that was doing artificial intelligence. And they brought me to this event, and it was that aha moment. And I said, wow. I said, you mean to tell me they were doing blockchain? They were doing, Bitcoin. And I knew about Bitcoin because I lived in Japan for quite some time. And they were going to these coffee shops and it was talking about Bitcoin. And I didn't pay attention to it. But I had that aha moment. And I said, this is not only going to be the future, this is financial energy. This is truly financial energy. So what was your reflection point, Mike, from going from that commodities to futures to now to what you're doing now, being the preeminent strategist for digital currencies and digital assets?
Well, I guess the key inflection point for me was when the price of Bitcoin definitively surpassed the per ounce price of gold in 2017. I mean, I had been introduced around 2012 from my eldest son, and my classic first thought was, this is silly internet money. Of course, I was focused on Bitcoin. But that's when everything really changed. I started to believe, because from a commodity standpoint, I love how I always focus on supply and demand, but the bottom line is price. That's part of my coming from the Board of Trade and Chicago trading pits and farming background is you don't plant corn unless you expect to get a profit. If not, you plant beans or oats or something else. It's just all about price. And I like to say Bitcoin wouldn't matter if it was trading for $400, but it's trading 39,000 at the moment. So it's all that matters. And price continues to go up, and it's what matters, and it's becoming predominant. So the bottom line for me also is, as a commodity guy, once you really analyze the supply and demand trend, clearly I've never seen supply like this that's defined by code, that's clearly defining 900 coins a day to 2024, 450 after that, and before last year was 1,800 coins. It's a clearly downward sloping demand curve, and then you just analyze, so all you have to do is check adoption and demand. It's clearly moving higher. So from my standpoint, it's simple. Price must go up unless something changes in that narrative, and that's what I see.
Yeah, that's great. So you see the price going up, but you also seeing the actual declining demand, or the declining not demand, the declining supply of the Bitcoin that's going out there too. That's actually giving the opportunity for that price to rise. Is that the case, Mike?
Yeah, well, I love that the acronym NGU technology, number go up technology. It's simplistic, but it's true. And we don't have to overcomplicate this. Bitcoin is becoming the digital reserve asset in a world that's going digital. and it's clearly replacing gold. I'm not saying it's going to completely replace gold. I'm not bearish gold, but it's certainly doing that investment portfolios. And I look at it as potentially akin to, for most of humankind and mankind, we measured travel speed by the speed of a horse. And now we do it by the speed of an automobile. You know, I'm from the Midwest. When you talk about how far it is to go visit places, you always say by hours. You usually don't say miles. It's just kind of a Midwestern thing. Oh, how far is it to go to visit your grandparents? Oh, 2 hours. It's just standard. It's a little bit less than the East Coast. I've been here for 30 years, but to me, that's the potential risk that's changing with Bitcoin. Bitcoin is potentially becoming the digital version of gold in a world that's going digital. And I look at it, there's a simplistic narrative, the way to really look at this space. It's one of the most unique examples of human nature I've seen in investments in a long time. And to me, that's the most important thing about investing sometimes, is analyzing human nature. And I get a lot of things wrong, but so far to me, the key narrative is, if you're any type of asset money manager, asset allocator, or portfolio manager, you're not allocated to Bitcoin or cryptos, your greater risk now is tilted against not being allocated. You kind of have to have some, because if it just continues to do what it's been doing for the last 10 years, which, you know, I'm kind of simplistic, trend's your friend, I don't see why it should end so far. I mean, there's certainly speculative X's in the rest of the space, but Bitcoin, Ethereum, so I see more of the same. So to me, most portfolio managers on the planet, I'll get it, they have to allocate a small amount, which is a trickle up, to this space, versus the risks of being looking like they're lost in space 5, 10, 20 years from now. So to me, that's what's happening globally. And it's still well before we have wide dissemination of ETFs in the US, which I don't really see. I don't see a plateau in prices until we get well past the wide dissemination of ETFs in the US. And to me, it's a matter of time. It's happening in the rest of the world. The US is just behind. And I think the pressure from being too far behind this asset technology will overcome at some point. And then there's always that risk of some kind of technological glitch I don't see. And the latest things I've seen that have pressured prices, to me, I viewed it very bullish. This focus on energy from started out with Elon Musk. I mean, it's the harnessing of energy that has enhanced mankind since the beginning of time. It's the source of the energy that matters. It's all going renewable. It's just a matter of time. And there was a pushback from the SEC on US ETFs, which is just a matter of time. It will come. It has to come in futures, or they have to have some really good lawyers speak on how to deny the futures-based ETFs. Because you being in that space, can you maybe be able to spell that? I'm looking forward to the lawyers speak how they're going to be able to deny an ETF tracking futures, which is a baby step, because they have wheat futures based ETFs that have less volume or the same volume as Bitcoin futures. It's just a matter of time. And then, of course, it'll trickle up. So to me, that's the big dangling carrot of bullishness that I have to get past before I can really say, okay, this space is over. So I view what happened recently, the dip down to 30,000 is a dip in a discounted bull market, and it's still, I think Bitcoin's heading towards 100,000 potentially this year.
Interesting that you say that, Mike, because you see that as a discounted bull market, and you nicely summed up that fear of missing out by asset managers, institutional investors, in terms of investing in Bitcoin. Now, I like to shift over a bit, because I read your report, and I love the fact that what you did was you created the point where Bitcoin would hit that 40K mark, but you also created that bottom level at that 20K level. And what was also interesting, you touched on Ethereum. So if I am a portfolio manager, right? So I'm sitting back and I'm looking at my portfolio construction. I may not only want to just go into Bitcoin, but I may also want to go into Ethereum. So speak to us in terms of, how do you get to that price point for 40K as a breakout point for Bitcoin? And also, what do you see about Ethereum? Because Ethereum to me offers a unique value added that's a little bit more unique than Bitcoin. I see Ethereum as not only as a digital currency, but I view Ethereum as a digital asset, because it is backed by an application. They also provide products and services. So they offer a little bit more than just the currency fluctuation that we normally see in Bitcoin. So speak to me a little bit more about that divergence, because I think you hit it right on the nail, in terms of where Bitcoin owns a good 70% of the total capital marketization of digital currencies and digital assets. So when Bitcoin goes one way, all these alternative tokens go that same way. But there was a point in time where Ethereum just said it became a little bit more independent, and that divergence occurred where now Ethereum is really following up on its own path. So, what are the actual influences behind that for Ethereum? And what do you think? And how did you get to the point of Bitcoin being at 40 for the breakout and at the base level at 20K?
Well, so to me, Ethereum is kind of like Bitcoin is to gold. From a prudent money management standpoint, you gotta kind of diversify. I mean, that's what the biggest risk from if you're a prudent money manager. Those of us who've been in investment fields for our careers know that, okay, well, my biggest risk is concentrated holdings, and might as well, why take the risk? So here's the simple narrative for Ethereum. You can't hold gold anymore without having some Bitcoin. It's not worth the risk. Clearly, the flows are heading out of gold in investment portfolios and into Bitcoin in investment portfolios. That's just a fact. It's a question of sustainability. I fully expect it to be sustained. And so you can also, in that bucket, you can't have Bitcoin without Ethereum. Why? Because Bitcoin is a global macro digital store of value. It does something very well. One thing, it does it well. I mean, I don't really want to use it for payment. I want to use it like gold. I do that, store my value. It's a major complement to the dollar, which is going digital. Use that for payments. Use Bitcoin for storing value and scraping off when you need it. And then there's the whole building block of the whole digitalization of finance, DeFi, and fintech, and that's Ethereum. Now, Ethereum has been the go-to. It is the go-to, and it's up 3.5x in the year. If Bitcoin simply catches up, it goes to 100,000, but it has legitimate reasons to that. It's already corrected 50%. So I look at that. Oh, it's a discounted bull market. Got way too expensive. But to me, that's what's the main take for Ethereum is. And so I'll just give you two key things about Ethereum that people say, what's the use case? Well, first of all, I look at Bitcoin. What's the use case? Well, it's the most unique example of a digital store of value that's transmittable, transportable, and you can transact it 24/7 that's ever existed. It's eluded mankind since the beginning of time. So that has value. Ethereum, to me, if you want to look at the value of Ethereum, just look what China is trying to catch up. They're trying to create a central bank digital currency and trying to go digital. It's already done. It's already done in Ethereum, and in terms of the dollar, not in terms of the yuan. Dollars are the most widely traded cryptocurrency on the planet. Is Tether. Very controversial, but doesn't matter. It's, to me, the bottom line is it's an Ethereum token. The digitalization of money has happened organically on a global scale, and guess what the world wants? Dollars. And it's all because of the trickle up of Ethereum. So there's one simple example of the use case for Ethereum. That's just one. You look at Uniswap. Uniswap is a decentralized exchange, trades about half the volume of Coinbase, which just went public. It's an Ethereum token. Boom, you got it. That's trickle up. Sure, there's competition. I was kind of that was one thing I got wrong. I would say it's a little bit about this time last year. I thought competition from some of the other platforms would move in Ethereum, and I was wrong, and I admitted that. But it turned around when Ethereum was around 500, got bullish, and here we are at 2,500. So I don't know where that stops, but to me, it's part of that diversification. Let's talk prudent money management. Unless you expect that you want to be the next Kodak, the next Blockbuster, the next Sears. No, you want to be the next Amazon. And it's just technology is happening so fast. This space is a key leader. And gotta expect regulation. It's probably going to come in stable coins, Ethereum tokens, things like Tether. But on coinmarketcap.com, I love clicking that. I love showing my colleagues sitting next to me. I showed her the other day that if you just look at CoinMarketCap, you see the three main currencies there. In terms of market cap, Bitcoin, Ethereum, and Tether. You sort on volume. Number one, Tether. What does that mean? The world's going digital. China's way falling behind, trying to catch up. It's happening organically. And the government has to do nothing, just regulate it. So to me, that's the key thing that keeps me bullish to space, keeps me bullish to Ethereum. I just hope the U.S. government doesn't mess up with regulation. And then you asked about levels in Bitcoin. So the Bitcoin landed last year around 29 grand. The key level this year was was 30 to 40. And when Musk made his allocation, when the announcement came out in February, 40 was the resistance. It broke out, got to 60, got a little bit overbought, and come right back down to 30. 30 is the foundation. It's creating a more.
Today too, Mike. I think today he also made the announcement that he's looking to buy up some more Bitcoins too.
I try to ignore some of that noise because it's what's the latest noise. So now, it was down. Exactly. That's one thing is, from my standpoint is I wish traders good luck. I'm a former trader from the trading bits. You want to block trading, bid offer spread. That's the ultimate
As-
trading. Now we have bots doing that now, but in a trading pit was a flip. So my focus is the big picture, and sometimes I deliberately ignore the noise and focus on the big picture. And that is sure, we've had a dip, we've had a good reason for a dip, but the reasons I think were very bullish ultimately. So 30,000 key support, that was the key line of sand. It's holding. 40,000 key resistance. We're stuck in that range for a while. Maybe it's more technical, and then we should eventually break above 40 and go to 100. That's the way I see Bitcoin. I see Ethereum very much. Raul Paul pointed out that it's very much tracking the way Bitcoin was in 2017. So when it got to so when it got to around 5,000, 4,500 a few weeks ago, it was too expensive, and then when it got down to 2,000, it seemed relatively underpriced. And here I see an upward trajectory. So something's got to trip it up, and I look at it as simplistically. It's 2 weeks ago, it was actually a week ago when Bitcoin dropped around 20. And there was prominent analysts saying, looking for, it dropped to 30, I'm sorry, 30,000. Prominent analysts saying, looking for 20. In the trading puts, we used to call that looking for the teeny, it's being the weenie for the teeny. And I think that's legitimate to say that, because it's just been focusing on the little picture when you should focus on the big picture. So maybe it drops.
You're establishing that floor. I mean, we know that the volatility, once you establish that floor, you have the volatility to go back up to create a new ceiling. And next thing you know, you're climbing up the mountain. So you're establishing that point where that resistance point that's going to go flow right back up again. So
I looked at it. It was an extreme example of bearishness that are ideal as an ex-trader, ex-money manager. It's a great way to indicate bottoms being put in the market. So I heard a bell ringing when it was around 30 because people are calling for 20, and now we're near 40. Sure, it's going to be resistance for a little while, but to me, it was similar to the bell that rang when Elon Musk was on Saturday Night Live. That was it's pretty speculative, 60 grand. Dogecoin is just good luck with Dogecoin. It's done.
That's a problem in this space. I mean, the problem that we have in this space is that we don't have the thorough understanding of one, the movement of the cryptocurrency marketplace. You brought on something very, very important. I can't disclose this, but prior to our conversation, I had a discussion before we go into Farah's question. I had a discussion with a central banker. We talked about the option of payment versus settlement. This is going to lead into your question, Farah, about the idea of El Salvador going in and actually using Bitcoin as a legal tender. And the conversation went on as to whether you have to make a decision. Do you want to use this as a payment system, or do you want to use this as an investment system? And oftentimes what happens is that people fail to realize that when you look at blockchain, it's actually a payment solution. It's a payment system. It's all about payment systems. And then you actually have the investment idea to that. But Farah, I want to add you in on this conversation because I know you had some questions.
Thank you, Ken. My question would be, DeFi as a decentralized finance is where not one entity should have too much power from ownership or holding to the point that what they do or say becomes a market event. We see this happen where one company accumulated Bitcoin, then declared that they accept it as a mode of payment for your product, and later on decided otherwise. So these market makers could say such things that could increase the amount of speculation in the market and could perhaps result in manipulation. So what are your thoughts on this, and how can we regulate this?
Well, that's a big one. So let's start with what people claim is manipulation. Every market, free market in the world, and since history of mankind, has some forms of manipulation. It's just the way markets are. I came from the trading pits. You'd see it more clearly in the pits once in a while. Run stops and things like that. But how they define market, how do you really define this term, which is what the SEC has used as one of the rules to not accept Bitcoin ETFs, is the best way to alleviate is greater depth. And one of the best ways to increase depth is add things like futures and ETFs. And that's clearly what's happening in the crypto space. The more trading volume, the less that can be manipulated and moved around. And to me, that's clearly the trend. And I see it ending. It's going to just clearly moving from the lower left to upper right in terms of volume and depth. And I see, I don't see Bitcoin really plateauing in price until around 100,000. See what might trip that up, but it's not a day trade. Now, as far as regulation, there's not much more you can do to regulate open source software in the world's largest network that's happened organically. and it's already been traded in futures and it's widely disseminated on a global scale, and it's already done. The toothpaste is out of the bottle, and any country has already tried to regulate, like India is one, is already had pushback from that. And the key thing that's happening with regulation is this China pushback should be more and more reason the U.S. should embrace, because this is a new Cold War clearly developing. Donald Trump pointed it out. Love him or hate him, he did point out there's a Cold War developing, and the U.S. is clearly winning. We're crushing China in terms of digitalization without doing anything, because it's happening organically. So let's look at like what's happening organically on a global scale. There's massive amount of jobs and opportunities being created in this country, not just this country, but most notably Canada and Europe. But really, I speak to them every day. There's so I saw that at the Bitcoin 2021 conference. There were so many major, significant adult supervised businesses I saw there, and really rational leaders and managers, not your 21-year-olds trading out of their basements. So to me, that's a key thing that's happening. And I need to point out the regulation is probably going to come in stable coins and digital dollars. World's going digital. Bitcoin's been the on-ramp to that. It's a major complement to the dollar. It's a store of value. The dollar is a reserve asset, and digitalization commodity means no one in the world wants to trade the yuan. And I've looked for them. Show me. I challenge our audience. Show me a traded token that trades the yuan on the blockchain or trades like on CoinMarketCap. But you look at the top 10. There's two digital dollars. Number one is Tether, and they have more volume than the top two or three together, and that's organic. So where's that going? It's just what the world wants. China's falling behind. What they're doing with cracking down is, I just love to see it, because it points out the major, those of us who remember duck and cover in the Soviet Union can see what's really going wrong in that country. Lack of discourse, lack of free flow of capital, lack of free markets. Why do they steal intellectual property? Because they have to. They can't create their own. I mean, it's very simple. I mean, come on, we remember that. And this is part of it. So it's just, I see it ideally, capitalism and free markets really kicking in through digitalization. And yes, there's speculation, massive speculation. Dogecoin at 70 was just stupid. 10,000 cryptocurrencies is just like 2000 in the dot-com bubble. Yes, that's just plainly stupid. I mean, some people are going to get hurt. But when you have an index that tracks maybe 12, you don't have a survivor bias. It's not going to track those thousands down there. And sure, there's going to be a correction, but what's going to win? The ones that really have utility value and make that humans better, and that we know what those are: Bitcoin, Ethereum, Tether, some of the other ones.
So, Mike, how would you discern that noise from? And I'm going to jump in here again, Farah. How would you discern that noise from the other alternative tokens? Because you do have other alternative tokens that offer good price value, like the Hedera hash graphs, like the Algorand. So, if I had to construct a portfolio of other alternative tokens, and I'm digging into your brain here, Mike, which tokens do you see to be good value that would benefit from this this digitization that is occurring? I do agree with the fact that it is digitization that's occurring, that is allowing for an opportunity here, but it seems like there's an opportunity for these other alternative tokens. And we don't want to get caught up in this noise that occurs when we have Mr. Musk who comes in and out. So which tokens do you see? And if you had to do a perfect construction of a portfolio, which tokens do you want to analyze and look at going forward?
Let an index do it for you. When in doubt, diversify. So I look at the Bloomberg Galaxy crypto index. We're going to be upgrading that soon. Other indices, an index will have that survivor bias to do it for you. I'm not in depth enough in the market and smart enough to figure out the next big winners, and I figure, why try? I let the index do that and focus on overall. An index will outperform the broad market, I think, because there's 10,000 of them. An index will pick the winners and go with the winners. And, sometimes it's not perfect. Like Bloomberg Galaxy Index recently kicked out XRP, but it was number 3 then. Now XRP is number 7. So, it's just, it had some issues, and probably was the wrong thing to kick it out. It's 60 cents and now it's 80 cents. But hey, to me, that's where you go. So the way I look at the market, the way I analyze the market is Bitcoin and Ethereum. Watch Tether for volume and indications of digitalization of money and dollars and the whole infrastructure, rising tide, and an index to track the broad market. My typical one is Bloomberg Galaxy Crypto Index, and then VanEck. VanEck has a lot of indices, the MVIS indices that are great. I love to track the large caps and small caps and compare those, and not try to lose more hair over finding the next best winner.
Not losing more hair and finding the next Bitcoin or Ethereum in place. Farah, you have any more questions?
Yes, could you share with us your thoughts on the origin of Bitcoin and Satoshi Nakamoto and the intent of producing Bitcoin? Thanks.
Well, I think I forget the exact name. From my understanding is from my research and I've read is the actual pseudonymous person who was Satoshi Nakamoto is probably, I forget his name, but he's probably passed away, and I think he had some mental illness. I've been exposed to that in my family, so it makes sense. But what he created, what he
was in Australia. They claim that he's Australian. That's
no,
where they claim.
I don't think it was created right. It could be, but
Okay, so
that's the
that's the
Australian you're
second
speaking
one.
of. But there's another
Okay,
developer very similar. The key thing is
can I do
there'll never
something
be.
at you, Mike? What if it was government? What if this was an option? So let me throw
Well,
a scenario. What if it's governments coming together and saying that we have to find a faster way to fight against or to combat against the current payment system, and we use a digitized approach to move money, because actually at the end of the day we're moving money from A to Z. So we
so
don't want to identify, measure, and monitor, and report through the Fed wire systems. And I'm a former Fed person, so I'm putting
yeah,
my neck out. So
yeah.
what if that was the way? What if that was an option? I'm just throwing it out there for the public. Now that
Yeah,
you know,
well,
both.
I won't answer because I don't, low probability hypotheticals, we can take hours, and it's probably better to do that over alcohol, and it's more
Right,
fun.
exactly. You
So
gotta
I like to,
hear.
yeah, so I like to focus on more likely probabilities, and it is what it is, and it's here now, and it's just gaining traction. Every day that I hear, that was the key thing that flipped last year, is the naysayers became at greater risk of being naysayers. Jamie Dimon, one of them, you name them, they're dropping like flies. If Nori or Robini ever flips, we'll know the trade's probably over. But rational money managers get it. I mean, some of the most successful hedge fund managers on the planet get it. Mexican billionaires get it. Their greater risk is not being allocated to this space in a world of rapidly increasing debt to GDP and QE, say from the Fed, and money supply and things like that. And you kind of have to. Your greater risk is not being exposed to it. And I start with Bitcoin and Ethereum, and then there's the rest of the space. So to me, that's what's happening. As far as the origins and stuff, it's already past tense. And to me, the bottom line is looking forward. Where's the market going and why? And for the bottom line to me is I think Bitcoin should continue to appreciate. It's at a discount in a bull market. And as far as all that other noise, it's kind of old, water under the bridge.
Right, right.
Exactly.
Thank you so much, Mike, for that the very, very insightful answer. We appreciate your perspective. Thank you. So, any more, Ken, questions?
Not at all. We want to thank you very much,
Yes,
Mike,
of
for
course.
joining the podcast, the Global Trailblazers Podcast. We like to know, in terms of your research reports for the audience, how is the audience able to get access to your research reports? Now, I've been fortunate and blessed to read them daily around 6:30 in the morning, but how is the public to reach out to get this insight, this information, this financial energy? I like to use that term because that's exactly what you're doing, Mike. You're giving us financial energy to go out and make good decisions in terms of how to deal with Bitcoin, Ethereum, and other alternative tokens. So how are we able to reach out to you and get those reports to make those good decisions?
Well, the best bottom line way is to become a Bloomberg user, which most people can't do, but just keep that in mind. My primary focus is writing for people on the terminal, and that's part of what I love doing is I'm completely independent. I got to get it right for terminal users first, and everything trickles down, like to podcasts like this, which is wonderful. Secondary ways, follow me on LinkedIn or Twitter. Twitter, I kind of just post, so I don't really have time to respond to things. And on LinkedIn, if you want, just shoot me, with LinkedIn, and maybe I can put you on my distribution list if you ask. Happy to do that. And so that's the bottom line. But ultimately, that's the key thing about what I do is why it's so unique is I'm basically here completely neutral to sit in front of this terminal, which I have in front of me now, and just absorb as much data as I can and write for terminal users to help them make their investment decisions. They paid for that, and then it trickles down to events like this.
Oh, that's great. We're very grateful. Farah, you want to close out?
Thank you, Mike and Ken, for that great conversation. And Mike, we are certainly most grateful and privileged to have you with us today. We'll certainly put to good use what you have shared with us, relevant insights and the sharing of the latest trends in the capital markets. Ken, you're such a great host. We are definitely most privileged to have you as well. So, to the audience, don't forget to apply what has been shared in our podcast, and we look forward to having all of you again in our next series. Take care and be safe, be happy, always grateful, always trailblazing.
Well, thank you for having me. I enjoyed our conversation.
Thank you, Mike.
Same
Always
here, same here.
Cheers.